So today is Tuesday. Um, I got up a little late, and essentially the move has already happened. A lot of the moves has already happened. The price have left the zone already. So let's say I'm going to just recap this in a few minutes. Let's get straight into it. So when price started, so we usually up around, or the schedule is supposed to be up around 8:45 to 9. So around 8:50 here. See price coming back down. Let's look at the 15 minutes here. Okay, just analyzing both. And like before, I analyzed and put down the previous daily low and previous daily high, and just mark it there. In which case, price is approaching previous daily low. Now let's see all the bigger time frame to know what is going on. So 1 hour time frame wise, you can see that price still have a lot of inefficiency here, all the way upside from from low to the high. 50% is around this order block over here, and it still linger around here. So essentially, this price is what I don't like, just because it has a void right here. All this one, they want this to be filled in because it's inefficiencies, right? They want to fill the price in, which it has already achieved at the moment, right? It's achieved filling in price and currently retracing, retreating back down. But essentially, this is the goal of it. And we also have this level here, but since this is border off, this whole area here is basically like a support. It bounced off of it a few times. This one here kind of remained the level and respected it very well. So essentially, everything happens in the middle here is vague, and it's not really that great in terms of predicting directions and the trend where it's gonna go fully, right? So looking at this price here, you can say that price is trying to trend downwards, trying to trend bearish, right? But at the same time, it is in this level right now, and it has not made significant structural break like this one here. Maybe a little bit, but have not significantly broke through this area of support, and it just remained in that area, and basically price push all the way up here and drag its Fibonacci from the high to the low. You see the price is around 50%. Let's hide that. So this one here is 50%, and price kind of retrace down over there. And coincidentally, we are around this area here when the schedule when the session start, when our session start. So around 9 p.m. right there, we can grab the 15 minutes OB and mark it up. As we know that this is a 50% level, so price can potentially push down at the same time as it can linger around here, support level, and push up once again. But essentially, this is a 15-minute order block that we marked down, and this one is the second 15-minute order block that we marked down on the way right here. You look on the right. And from then on, price pushed through 45, and we always, so right now I look for an entry and an entry of a retracement on the premium price. So Fibonacci from the high to a low around here, right? So zero point 0.5 and above around this area, but then price from a 5 minute order block, which indicates that it is forming some kind of resistance, right, towards, right, forming some kind of resistance that price kind of trying to remain this level here if it can. So around this level, it, even though it has not reached the zero point 0.5 or premium price, you can see on the left here there are still some spaces. Price coming back down here. There's still some spaces in the candle hint at the same time as the Fibonacci from the high to the low here, and see the minus 27. Let's mark it down once again. This one over here, right there. So the minus 27 is around here. So this is the level. Let's just mark this here so you guys can see a little bit clearer. This is the level where we want to see take profit, right? So if the trade is a 1 to 3 ratio down to this level here, then it should be fine, right? Just wait for a candle to close in within the 5, and of course confluence and mark up the other order blocks, the 3 minute and the 1 minute as well. But the major one is the 5 minutes, and then condense it down to 1. Price come back down, and then form a 5 minutes, come back up once again. Wait for it to close. The second candle closes, and the third candle, and you just basically sell from there. sell it down and project it to this level here. It can be a little bit lower. It can be to minus 27, but essentially is around this area of minus 27. And candle hint, while I look into the left as well, the higher time frame can indicate those candle hint of the wick. So you can see here, this is the wick, and just basically mark it down right there. And this is the 1 hour wick, 30 minutes wick. I go down and mark it down there, and then 15 minutes wick already down here, or you can just aim in within that 1 hour OB. But essentially, price come down here, touch the 1 hour wick, and then try to retrace up once a little bit. And then, this trade here is the first trade, so we can take 1 to 3 risk ratio and call it, the first trade. And you can even ride the price down, but every first single first trade, we always take 1 to 3, unless there's like a little bit longer, take profit down here. Essentially match up perfectly, so um, it is really, confluence is a confluence with each other. And it's just a suitable and a plausible trade. So essentially, just wait for the first candle to close in within the level, the second candle to maintain the level. The sec- oh my god. I was saying the second candle to maintain the level right here. The second candle maintaining that area, and the third candle open, and then you can enter on the third candle. But yeah, that's the first trade. 1 to 3 result ratio. It's a retail zone, but at the same time, we still have some space to basically gobble up. And there's a 5 minute matching over as well. So we're taking the risk as the price is trending bearish, and we are at that level where price already been retraced up here. It's basically continuing and pushing down to minus 27, and matching up with the candle wick hint on the 1 hour time frame as well. So after that, price linger around. It touches the second candle hint right over there, around 30 minute candle wick. Coming back up, break to this 5 minutes here, and there we go. Coming back up, break to this 5 minutes OB, and then linger and still in within this zone where we just left. Right, this is now a resistance area, and price coming back down once again. I say let's zoom back down. So price break this. There's no order block onto left at all, right? You need to mark the body of the candle to the low wick. So the 1 hour here, the 30 minutes is also not in as well. So essentially, price is still trending bearish. We need to see a clear sign for us to basically enter in the trade. So this is kind of like a mix in the middle of the range here. You can take this as a 5. When price coming back down here, you can price up a little bit, but at the same time, we are in within this area where price is still trending very bearish, and there's no order block to the left, which is one of the principles that we need to take care of. There need to be an order block to the left for us to consider, or a zone of interest, which is the order block, for us to consider to take a setup in within. In which case, there's no order block to the left. You can see here, mark my words. There's no order block. 5 minutes as well, and the 30 minutes is a little bit lower, as well as right here, 30 minute body candle lower, and of course the 1 hour is lower as well as I mark it up. So essentially, there's nothing to base off the setup off. So we just by basically waiting for um, a larger continuation, right? So essentially, price come up here, stop a few people out, a lot of stop loss are up here, and then price push down once again, respect this level, price put up, respect this level. This 1 minute was not really significant because this is a full three white candles, 5 minutes as well, 5 minutes even clearer, just 1 2 candle, and then essentially, this whole leg did not break any major levels for us to continue down, right? Price coming back up here again, respect the level, coming back down, and respect this level 1 minute once again. I'm not a fan of trend lines, but sometimes it is clear, and it can mark a continuation. So you can see here, even without marking this up, you can really see how price really respect and broke through. So after it broke through, this one right here, this previous low, it broke through the previous candle low over here. Price coming back up to the 1 minute OB. You can enter on the precisely on the 1 minute. I just like to mark up the level here. So this should be the level you should enter, right there around the candle wick or the candle hint over there. Price coming back up once again. So calculating the spread should be the same, 4.7 pips, and then write the price down to the 1 to 3 ratio, and essentially is around here or so. Just mark up the 1 to 3. It matches up with the 5 minutes OB to the left. You can see there's no 1 minute to base off of, but essentially you can just go into a line chart and mark up one of these levels over here, kind of like all the lows. There we go, all the lows, and yeah, basically confluence the key level, but it's around this 5 minutes that you can take your 1 to 3. So it's just decided this is a second trade, so you can take the profit off of here, and if it's yes your stop loss right there after price reach a 1 to 3 ratio and then price push through. This is another candle hint on the 3 minutes, I believe. Yeah, it's just a candle hint on the 3 minute. So I'm just mark this here as a wick and take the second profit. And then of course the final area here, which is the previous daily low. You can mark the previous daily low as the take profit or the candle hint on the 1 minute, in which case is around the same area. And yeah, this is a stop loss now because this is guarantee 1 to 3. Just kind of ride the price down and take profit along the way. This is the last take profit right here around previous daily low with that candle hint on the 1 minute, which doesn't signifies a lot of area, a lot of support, I guess. It doesn't signify a lot of structural integrity because 1 minute is kind of like a hint. 1 minute is just for us to confluence and put an entry a little bit better and basically put a key level clearer. That's all. But yeah, this is a second trade where you can hold the price down and basically stop loss over here after price break to 1 to 3. Stop loss, take profit, and then that's the whole trade. From then on, prices left the zone. Look to the left right here. Oh yeah, I didn't mention there's a 15-minute order block as well. So you can see on the chart at 10 a.m. the 15-minute order block form, kind of indicating that price is probably going to maintain a level and having more strength to push down. So essentially, price push up once again, matching up with the trend line as well after 10:01 right there for price coming back up and then push all the way down. You can see on the right over here, the 15-minute order block is formed. Kind of like add another confluence into it. Yeah, that's pretty much it. From then on, price just left the just left the interest zone. It broke through the 1 hour OB, previous daily low as well, and basically broke through this five over here because it broke through the 1 hour OB. I'm not sure whether it's going to continue or not, or whether it's going to continue upside. Um, Either way, we're not going to take a trade because it broke through the previous order block. And you can see here, the larger time frame, you can see some constitutional banking. So today is having trade balance. Today we have some news out, trade balance on the U.S. dollar. Let's go ahead and go to Forex Factory here. So yeah, today we had trade balance on the CAD and trade balance on the USD. Basically, kind of balancing out, and you can see the subtle moves of the banks or the big moves. This is how it works, right? A lot of stop loss are down here. Price come down, stop out. A lot of people gather back liquidity, and they push price back up once again, right? This is the liquidity grab, right? So basically, this is the area where a lot of people are stopped out trading order block and support resistance. We are trading along the line. We're trading along the candlesticks. We're not trading, a bigger order block like this. We're waiting for a hint. We're waiting for a confirmation or some kind of structure in within the leg of structure and within the price recently formed, right? We don't trade just based off the historical data because we don't know where price is going to go, right? But essentially here you can see the bank at work. So you can see, the big money at work. Price come up here, right? Break through the previous resistance, right? And then push price that back down once again. This one will be debatable because it is at the point 0.5 Fibonacci. At the same time down here, price break through the previous 1 hour order block and then push all the way through. A lot of these order here push through all the way through after gathering liquidity, stopping a lot of people out, gathering back the volumes and liquidity, and they put in the order. push price all the way up once again after price have swallowed all of that, inefficiency to the left. And we even have the 50 minutes over here as well. Essentially, structure wise, the same thing, right? But it's we're trying to get at here is price stopping people out, gather liquidity, and then push price up once again. Right now, after that, a lot of people got out of the position, so balance out the trade, and basically remaining around this area here where price trying to swallow back up a lot of liquidity, a lot of void that it has left. But yeah, which that's it. That's pretty much it. I kind of drag this out once again. Let's go to 5 minutes. Yeah, that's pretty much it. Um, Again, there are a few more examples in the lower time frame, but that's a clear example you can see on the charts, right? Price stop people out, push through. Like stop people out for what? For liquidity. They want to see the gather back the volume, trading with billions of dollars. You think that there will be lot size, matching their leverage, matching their capital, right? You need to stop people out of their positions so they can gather back and get back the volume to push price up once again. But yeah, other than that, that's pretty much it. And today's Tuesday, December 6th. December 6th. And I'll see you tomorrow on Wednesday.